actually is like winter outside today. Jesus. Well, may as well get used to this. It is September after all. Okay, so what we're going to be going over today is obviously it's just a follow-up video. So obviously, like, if this was all valid, and you actually opened above, I would probably say require at least at the 35. That would be all right. This would be a valid bar, a nice wick rejection, close and bearish in this scenario. So here, like, this wouldn't be a valid setup even if it opened above, which I don't think it does. This is a shame that it's actually it depends. It really depends. So you got orange, white, blue, white. This could actually be valid. Actually, I would probably take a stint at this. To be honest, take a punt at this. So let's just. I didn't actually see this as I was like, I'm obviously assessing every single day, so don't worry on that. Okay, well, this is invalid. EMA is unstacked at all. Orange needs to be above, or at least the thick white needs to be above, not the opposite, the thin white at the top. No. So yeah, this is a valid trade. Obviously, I assume this is bearish. Yep. You need to check that, because if it's a bullish close, then obviously you're not getting involved, because that bullish close, if it closed like this, couldn't close red. It, like, because it's not if it was after the fact, So anyway, because like we're trying to replicate like those results what we were getting, just having a feed as of today and then scrolling back to 2018 of, for example, what you get this criteria, and then you would get a green bar close, and then place your stop loss. Like how I place it is I mark the higher hand, and then I mark a good little thing above, distance above, and then I look for POIs to the left of what makes sense to get valid, whilst picturing in my head this candle being gotta put some moisturizer on my face. Feels like it's like sandpaper. It also doesn't help that the water that I shower with at the gym is absolutely shit. Anyway, let's rub this moisturizer in. So yeah, like we're trying to assimilate or emulate as close as possible to what we would have been marking up in the past with this clarified criteria. Now this is the clarified criteria V2, basically, because it's like you have to do it like with the understanding that, like, in real time you just need a black, in this case down close neutral bar if you've got this on, right? Basically, you don't even need this indicator, to be honest. You literally don't. But I just like it because it helps discern things. And also, it is pretty darn nice if you get something like this. I'm pretty sure I had one recently. I think it was like the last trade. Oh, no, it wasn't this. Yeah, this. So see, this was real time. As I showed in the past video. I cannot speak, what the hell? But yeah, just bear with us. I'm not very articulate today. Like, if you get that is like A star, so like obviously, like, you just have A and A stars setups with this, so like this would be A star. I can't even remember what I classified or deemed as A star, to be honest, but it doesn't matter. A is A star. I would be taking the setup, so it's the same setup basically. But you have a bearish close and you've got a proportionate wick rejection, and that's it, and EMAs are stacked. Of course you're above here, but it's alright in this instance. When you get a criteria set up like this, it's very high probable. I would also and you also visualize in your head this close and green, and then how you'd want to place a stop, because it's like it's poised to just go right. I would probably well, first of all, we can bump this TP up, because we're just utilizing a 1 or 2. So you would have this here, and you would look at this. Yeah, you know, you would probably be okay, to be honest, with this. Maybe he's a bit above, actually. Yeah, yeah, it does look a bit sus, actually. So yeah, there we go. And then we'll just flow through the rest of this year, of like how I'm like basically what I'm gonna call this video is something like how I'm testing for AMD, tylerGcapitals model or criteria, with real time. You know, like how I'm gonna do it real time. Honestly, the reason why I don't really give a shit about how I'm articulating things so poorly right now is because, I mean, like, at the end of the day, it's a simple set of criteria. You don't need to talk about in some fancy way. It's not necessary. So yeah. Oh. Well, actually, no. You're actually above the 50. Like, at least, you know. Yeah. Okay, you're above. Yeah, but it's like, you're actually below. Yeah. And it's like the 50 is below the bunch of 15s and 13 and 9 and 5. So that's just not valid. And then obviously also you need the 50 below the 100, otherwise you're just not getting involved. So here would be a fine day. Ooh, but then obviously it doesn't close above the parabolo, and it just completely soars to the downside. I think I actually remember this trade, like when so we've kind of had like, so it originally was just 4 hour AMD, then it became 4 hour AMD clarified, where it's like, you know, you need to have the open above. That was all that was what we had always done, but then you can't, like, it needs to be an opposing bar that you then get the next bar open above, and then you get a bearish close either on this bar that opens above or the next bar that closes above its parabolo or above its parabolo, right? So and like obviously also down close too. So it doesn't matter whether it's red bullish or whatever in advance. It just matters that you get that. So here. You don't, so like here is an instance where you just don't even have to decide on whether this would constitute as valid, because you don't get an opposing, oh actually shit, you do. You do get an opposing close, and then you open above, but then you don't get a bearish close, so it's just like you don't even need to decide. So it's just like, yeah, whatever, just don't waste any time on it. So here we're going bullish. Oh my god, why is my chart so laggy? You're not getting involved till at least here. And you have nothing, you do get an opposing close. Okay, this could be A star. So, and what A star is obviously you get a proportionate wick rejection, and then you close bullish, and you also open beneath 75 to 70% of the 23 bars open range from the open to the most extreme point traded, and off the opposing bar to the direction you're looking to trade. So in this case, if it opens at the 70, no, it doesn't. Whatever, that's very unlucky. Whatever. So this bar probably, well, no, it wouldn't have actually. It's still closed above. So it's not opposing. So you can kind of fly through like testing this. But basically, what I'm gonna do with this is I'm gonna establish like a proper rule set for like what I kind of know in my head pattern wise like what constitutes as like a valid setup, but like see, my chart's lagging so much, it's still going. I mean, I don't care because you play it out anyway, but like why is it still going anyway? See, it's lagging hella. Okay, Jesus, it's still going. But yeah, I need to stop. I think I kind of already know. So like, for example, you get an imposing close, you open beneath 70 to 75%, and then you also get a proportional rejection. If you don't get that, and it's like an awful close, and it's just like you just stay out. Simple as, you know, you're gonna have an array of markets. So yeah, would be an iffy one, to be honest, if it's valid. So I hope it's not. bet the 30 is just too. Yeah, well, it's obviously going to open beneath there, so you'll be using the bull. If it opened below and then it had a nice wick, but then a bigger topside wick, well then no. And it also, if it's equal too, it's like nah. Ideally, what you want is like an opposing bar close. Doesn't matter how this closes, and then you get this bar. It wicks into an FVG, and then it closes with like a significantly smaller topside wick. In a bullish case, obviously, that's referring to. So you know what I think I might actually do to just like I'm just gonna put a line here and save, and then quit the thing because it's like really being slow, and then we'll just cut back to there and then play it back forward. So yeah, and honestly, like what I'm kind of looking to hone in on is not previous day high sweeps and all this shit. No, I personally think that there will be something out there to capitalize on them, like with a very high probable rate, but the circumstances that you look for that previously high or low sweep under must be so high, must be so logical and relative to the situation at hand with regard to how traders are perceiving the worth of, and it's going to be relative to multiple time frames. And if you're looking at previously high and low, you're probably going to want to do like a top-down narrative of like from at least a daily down through like all the other time frames, and establish what the narrative is with regard to what sort of worth traders are placing upon in this case region 6, in this case the region that the pound dollar is available for being bought and sold at on this occasion, in a way where it's like, yeah, okay, it makes sense for them to be biased towards one side of the market, and then the opposing like previously high or low point then be swept and then look for an inversion or whatever. But in my opinion, it looks too pretty and good on paper to like go into it, like, to be honest. So I'm not going to be going into that any further, and I have in the past loads of times. As I said, recently turned 20, and basically anyway I turned 20 in April, so it's not that recent to be honest, but I have went through many years trying to come up with a system for key highs and lows, and trust me, it doesn't work for me. Anyway, like that is for me. It might for you, but I highly doubt it, because I've seen a lot of charts, I've seen a lot of markets with studying this, and I couldn't find a single thing. Obviously, like there probably is something out there that has like, but I don't know. It's like Tom Algott's fishing technique. It's discretionary. So what that is it's where you purge a key low and then you close above the lowest bar. Like, so the first bar, the first most extreme bar that gets a close above, you enter. So like here, you'd be entering and you just long, and then he'll take his profits the way he does with his major level of experience, right? But or like, for example, you have like a major high, and then you have the most extreme bar traded, which is here. If, for example, it kept going, then this one would be it, but no, it's this, and then you wait for a close below, bang, and get smoked. But like, he doesn't use it willy-nilly. He'll only use it under when the right circumstances are present. Now, what are those circumstances? Well, I would say it's based on his intuition, it's based on his like overall feel of what sort of way market participants are inclined to interact with, where external line products are relative to the region, the region that's universal, but in the context of the 4 hour, in terms of how over 4 hour time slots traders on this occasion are trading, you know, how they've shown interest and what sort of interest is poised to reside at, for example, like the most recent region that the market's sat at. If it's if it happens to be that, like, yeah, it makes sense for it to push the about like here, and that coincides with previously high or low, then yeah, but he's not set out to trade specifically PD high or PD low, right? Like, I've honestly found it's a recipe for disaster, to be honest. But yeah, so I'm not moving forward with them any further. Also, the EMA thing, I'm also not moving further with that anymore. I just think it's a load of shit, basically, that looks good on paper but isn't, and you waste a hell of a lot of time with it, to be honest, because sometimes you get a good thing and then sometimes you get absolutely smoked, and it's just not, for me, it's just not like good. So what I'm going to be moving further with from now is this Tyler 4-hour AMD clarified V2, which is like basically it like we'll just wait for the next example, and then I'll tell you what I've been, and then I'll tell you also what I'll be moving forward with. So we're just waiting EMAs to be stacked in for opposing bearish close. Let's keep playing it out. Keep playing it out. Keep playing it out. So bullish still. Opposing bar. I think we'll have a. Oh no, actually, you're below. Oh god, we're going to be playing out for a while here. I've left my thing on for a while. So here's an up close bar. I'm pretty sure this actually could be a setup. Hope not, to be honest. That would be really ugly. Oh wow. I mean, you probably still get away with it, but it's quite ugly. And also, it's not valid. It like look, it needs to have a nice wick, right? As Tyler said, let me just get the screenshot up because I definitely screenshot it. What day was it on? Let me just think, so I'm not like cooked. It would have been on Saturday. No. Oh, it was on the Monday. Yo, what the hell? Yeah, so he said, so he sent us a thing. You can go to my Twitter, learn it, live it, love it. Notice how much higher the win rate is when we tap into a H4 FEG. Sweeping lows, closing with a wick. And those examples just show that the confirmation bar has a nice wick, right? And it's almost basically like what I enter on with the strong bar close. But like what's most important is you need to have a nice wick, right? Ideally that is into an FEG. So in this example, like I'm gonna mark it up anyway. Actually shite. This actually might not even be valid, but I would assume that it is. I hope it's not, to be honest. Yeah, it's not valid. You would want it to open at least at the 75, so we'll escape that. Yeah, that's a bit of a shame. This is a perfect example, even though it's not valid. But like, we could have an example here actually, but like of an invalid example. So see, like if this bar, so that you got your first bar's opposing, right? Check. Your aims are stacked. Check. You don't open below the 75, so not check. And also, I'm pretty sure you would probably end up using the 35. Yeah. So you would use the 35 here. But like, so it is valid to actually have this marked, and also it is also valid to have this marked because if we're in real time, we would be marking an opposing bar with EMA stack because for all we know, this bar could open below and then close below. Sorry. So bull, what do you know? This is a pristine example. So what you don't have the FEG, but you do have a nice wick. Now that wick is deemed as nice in proportion to like the body, and then the opposing side's wick, which is always the opposing side's wick to the direction that we're looking to trade, right? That holds like relevance. So like opposing side, the top side wick holds relevance for sells because that shows like, okay, well, market participants are no rejecting buy-in at this region, but the aligned wick in this case, in a bullish example, would be the bottom side wick because it shows that traders are rejecting selling at this region too, relative to like where the market's at over 4 time periods at this region in prices, and then also throughout here shows you that there's been a strong intent to trade the underlying product on this occasion at what prices were available to do so, right? And the participants that were operating on this occasion were over the course of this 4 time period. How they were willing to trade, right? But it doesn't close below, so it's not valid. But like this would be a valid example. It's almost valid though, which does make us question a little bit. Could you possibly take that? I don't think I'm going to fuck around with it too much though. Here, I doubt that you open below the 70, but this would be an invalid example. Too much of a topside wick in proportion to the bottom side wick is just not clean. So we're really implementing the experience here, which also makes me more confident with this edge being edge, to be honest, because I personally think that your own interpretation is what people can't copy. And why might that be a problem? Well, if you think, right, you mock fucking previous day as low and just buy, and of course it works here, but look, you sell previous day, like, you're gonna get anyone and everyone will be looking at that. Like your mom and dad and whatever, first thing they'll probably come into contact with is some sort of liquidity sweep or something. It's just a whole load of BS in my opinion, right? Like obviously in some circumstances, yeah, it's valid, right? Where it's like, yeah, it makes sense for the way the market needs to set up to, push down, and then that push down point coincides with like a key liquidity point. But like, you know, like you can't just blindly trade off them. Like, oh, there's a high, I'm gonna wait for it to sweep. Like, no, you need to have like the right circumstances to then like see where the market needs to set up, and then that coincides with the high. You don't impose like your will, if you want to say. So, damn, we're on 2020 now. So we're looking for sells, sort of set up. We get the EMAs to align on the sell side. Certainly not the case right now. Were EMAs stacked there? No, because if the EMAs were for bullish, you would have to have the 100 beneath there, so that's just simply not valid. So here, not valid, not valid, not valid, not valid, not valid. You're below here. This is really messy. So wow, holy shit. So you're below, like for sells as well. These would need to be on top of each other. For buys, these would need to be low. So you can just kind of skip all that. That's really choppy, to be honest. Holy shit. Here, not valid. Also not valid because this would need to be like this. And this is also not valid because you would need the 2, 100 and 50 aligned, stacking like they become about here-ish. And anyway, yeah, pause and bar close, and then this bar closes probably above, to be honest. Maybe anyway, maybe it's not actually. And then anyway, you get your down close, but it's below previous bar low. Jeez. Yeah, so nothing. Alright, so I think we've got an example of possibly an invalid case here. So your EMAs are stacked, EMAs are stacked. You then probably open above. I hope not, to be honest. Yeah, okay, good. And yeah, you would definitely want to just probably say, yeah, it's the same thing. So 70, 75, doesn't really matter. So here's a good example of possibly, actually it's not valid, these need to be above. That was a good quick spot. These below, these are above, below, and these are kind of above. Jeez, that, yeah, like this isn't valid. You, this is not valid. The 50 is below these. It's just not valid. This probably would be. This is a nice example, but it's not like doesn't set up appropriately. But notice your emails are aligned. You have pushing this FAG and then sell off, but it's not valid because this needs to be opposing. It needs to open above and then bearish close and then beneath the previous follow. So yeah. We'll just flow through the whole of 2020. So you're below and then you're above those. Jeez, like you're not looking for longs. You're below, above. I hate when it's like this because you have to waste time. You can't just flick through the charts. Because there's no setup most likely, but it's like you still got to kind of analyze it because in real time you're obviously honing in on that one day quite nicely, so you're not going to miss anything, right? But like in something like this, you might end up missing something, which, well, yeah, whatever. I'm rambling. So Ooh, this would be a good example of an invalid trade. So I think it actually is a good, and for all we know, it could sell off, and I wouldn't actually say it probably would actually in this scenario. But anyway, you open above, and then you get a bearish close. But look at this bottom side wick, right? It's not nice at all. You do have a top side wick, but like the bottom side wick, it's just not a proportionate like wick rejection on the side that we care about, right? So, and I know it is in an FEG, and to be honest, actually knowing my look, it probably would just sell off, and but see, there we go. Yeah, there we go. We wouldn't have uh, got involved here, so that's good because of this like bottom side wick rejection. It's just not nice. It needs to be like, if anything, something like this, something not like this, something not like this, something like this. Possibly, if this is a bit, actually no, that'll be bullish. That maybe okay. To be honest, you could possibly take a hit at that. Like this is perfect, not perfect, not perfect, not perfect, not perfect. So yeah, you get the gist. Mm-hmm. So look at this. We've got a possible example here. I doubt it opens above though, to be honest, and I think this was going to be an example where, yeah, you would accept the 7, yeah, so there we go. It doesn't open above, so you can just keep scrolling. Wow, okay, this was a strong trend. Jeez. I am noticing something here, the stack DMAs and then tap into an FEG, and then look for sell, but like, I don't want to go into something again that like looks good on one particular occasion and then never again, to be honest. Because it's just not okay. This is a perfect example, actually. Oh my god, it's still going. So you get a very nice close. Yours, like, so you got a nice. It's just a very nice close. It's not very nice wick rejection, but it's just a nice close. Little tap up, bah, close right at the lows, showing that like that strong intent has lasted up to the region that the market sat at, like as of the next open bar, relative to 4-hour time intervals in this case. So you have a feel or insight into how the market has the close point, which is where the next bar is going to open at, right? And so therefore you know how those prices are going to be. Maybe just a little bit better. Yeah, just about there. Maybe it's a tiny little bit higher. Actually, yeah, it's fine there, to be honest, because like you also have to like visualize in your head like this bar closing green. That's like, yeah, this is strong. Because in advances probably did close green. Oops, what am I doing? Okay, so there's a nice example of a win. A setup. Like back in the day, right? I would have had this marked because you probably open above and then your EMAs are kind of stacked and then you close below. But like, that's why it's not valid, because like you close below, right? And it's such a little tiny weird rule which makes such a difference, like genuinely too. Okay, so we can just play out. this. Well, I may as well actually pause it because it's going to go on for ages now. Stocked. Possible example of an invalid trade here. Actually, no. The 100 is below the 50. That's not right, I don't think. Yeah, it's not. Yeah, not valid. Right, so it comes valid in the May. We're flying through this, flying through it. Yeah, not valid. Not valid, not valid. This would be valid, but well, if my screen would stop, you can see that it's at 3 o'clock. But that's a really nice trade actually, because I'm only looking at these. Well, no, sorry. This and this. But to be honest, that looks good. You know, nice proportionate weight rejection, bearish close, nice bearish close too, notably. Oh god. This could be this is a valid trade, and you're getting in right at the low. Yeah, that's not very good. But obviously, like, I think this is like the first valid loss. But that's a valid trade. You kind of get away from that because you're bearish EMAs, you're stacking opposing candle. Oh, that in an FEG, nice opposing wick. Oh god, that would suck. But it's gonna happen. I seen some guy. He. The thing is, what? Oh no. So it was 17th of May 2020. I don't know what's happened here. I've seen some guys called Tommy, so I'm following him on Twitter. He has his average win rate is like 50% basically, right? And no less he goes for a 1 to 2. But he's targeting things, right? So if he had a fixed 1 to 2, he'd probably have even better strike rate. So it's probably like, let's say 60 to max 70. I would probably say 60 to be honest. It would be more on the 60. Okay, but first of all, this is like a very valid trade because just picture this close in red. Also in advance, this would probably also be red. In fact, this probably wouldn't. This would probably, I don't know, but we're picturing my head it closing red, and so basically why I do that is because it like when I would just like go to the current day without replaying, just use my keypad thing and scroll to the left. These red bars and stuff, what you see are red may in real time not be red. And so you kind of were marking things up after the fact, and I realised I wasted a lot of time. But still, the criteria is still fundamental, meaning like you must have your emails stacked, in terms of like you don't need indicators, right? Which is actually like pretty cool. But that also the win rate I remember on the YM was about 92%, but that was just with scrolling back and after the fact, the bull trading charts, right? It's probably going to decrease to around 80 at least. And I'm being realistic there too. So it could be more. It probably will be, to be honest, because I haven't seen it make much of a difference. But in after the fact charts, you probably wouldn't get into something like this. But anyway, real time you would. So because this is the type of trade where in real time you would need to take. But anyway, so picture it closing red bearish, your EMAs are stacked nicely, you're in an FVG, a proportionate wick rejection. I would personally want to place my stop about there, and then you just target your 1 to 2, and obviously it miserably fails. So this could also be a bit of a sticky one. But basically, yeah, he had about sometimes a 40% win rate and stuff. Hopefully it doesn't close above. Hopefully it doesn't close above. And like I said, what he was doing. So hopefully the bear is just obvious. Yeah, good. So you'd be going with the bull. Nice, because this would be a bit iffy, to be honest. It's not really a nice close, and it does have a wick. I don't know about that one. I'm just glad it didn't create valid conditions. So, but my point is that, like, even if you've got a 60% win rate, which I think you can easily have with this, genuinely, in a 1 to 2, even bigger, you're good, right? Like, you are good. So nothing valid. Pausing. Okay. I hope this is bullish. If that was bullish, that would be sick. This is exactly what you want to see. Oh, well, actually, you probably don't open below. I just realised. Okay, well, that's not valid. Yeah, close way above. Below. We'll do one more month, and then I'm going to call it that and upload the videos because I need to, because I've also got some from yesterday to upload, so there's going to be a couple going up. A couple meaning quite a few. So we're waiting for the 50 to go above 100. There we go. So here we go. This could be an example of an invalid trade right here. I'm happy I spotted that like a hawk. So you got opposing bot. Oh, actually, I don't even think you. Alright, okay, we're getting wrong. Hello? Yeah, why? You've got a lot. Yeah. Okay. Anyway, right. Bye. Okay, so I don't even think it opened below the 0.7. I can kind of be sure, but let's just say it did, and then also I bet the 30 is just out of the question. Yeah. Well, yeah, you don't even open below there, but I would probably just say you need to either open way below the 35, almost at the 70, and then yeah, I would probably just go with that. But anyway, if that did happen and then this bar closed like this, so it just opened here and then it formed like this, it's got no nice wick, and it's also got a top side wick rejection, right? It's not valid. It needs to have, if it can have this size wick, but the other wick needs to be nice and like just a bit bigger. So yeah, hopefully we can just fly through this. Nothing. But you're below. Not opposing part. You're below. Valid, but it's like you're below the EMAs. Just fucking stay away. This is like a nice example of like a non-valid trade though, because this is something that you could take if it was valid. Nice wick, nice bar close, and then little topside wick, but nothing major or cry about. And yeah, so yeah, note. Like also, the reason why you also don't need this indicator is because you just need a opposing bar close, right? So like, you know, you just need a first bar close down, right? From opens, close down. You know, in the bearish case, opens, close up. That's really, really cool and simple. Okay, so I think we might end up with a trade here. Oh, fuck. No, we won't. But this is an extremely nice instance of a valid setup. So yeah, I would look for the 35 or below, and you get a nice wick. Notice it's also an OFF value gap, and yeah, you do get a bit of a topside wick rejection, but like it's fine in this case. It's experience based, this, but like, you know, you're comparing the size of the wick on side to you to the body, and then the opposing wick, you know, and then like, yeah. So nothing, and probably nothing here. Opposing bar, yeah. Okay, there we go. So there we go.